Hi, and welcome to the July 2016 presentation for the Downtown Pittsburgh Investors Business Daily Meetup. My name is Eric Rossi. I'm a co-organizer of this meetup group. And on this first slide here, there's a link to our group's meetup page. So if you happen to have found this video on YouTube and you want to join the group or check out the group, you can go to Meetup and find our homepage right there. So the purpose of this group is to educate individual investors about the CAN-SLIM investing strategy. So this means identifying the best educational material that's available. And this presentation is for educational purposes only. I'm not making any recommendations to buy or sell securities. Investing in stocks does carry risk and you can lose your capital. I'm a non-professional volunteer investor. And Investors Business Daily, IBD, and CAN-SLIM are registered trademarks of Investors Business Daily, Inc. And Meetup is a registered trademark of Meetup, Inc. Topics for this month. First, we'll go through the market dashboard as always. Then we'll go through the IBD feature of the month. Then we'll talk about stock list management or watch list management. Then we'll do a market analysis and a couple stock simulations. And then we'll conclude. Okay, the market dashboard, this was done about probably August 1st. So at that time we were in a confirmed uptrend. Market's been in a confirmed uptrend for about a month now. So we get a green for being in a confirmed uptrend. The uptrend health just passed the 30-day mark, and traditionally the bigger gains are made in the early stages of a new uptrend. In the first 4 weeks is when a lot of breakouts happen. So we're just slightly beyond that, but nonetheless, this gets a yellow in my book because we're past the first 4 weeks of the new uptrend. Distribution day count is yellow because we have 3 distribution days on the S&P and 2 on the NASDAQ. Actually, this changed yesterday to 4 on the S&P and 3 on the NASDAQ. Still yellow. And the Fed activity, the Fed raised interest rates in December. They've been talking this year about more interest rate hikes, but as of today, they haven't acted on any of that. They've been waffling back and forth about it. But since interest rates did increase recently and they're expected to increase again this year, I'm giving this one a red. Rising interest rates typically hinders the performance of growth stocks historically. The S&P 500, it's above the major moving averages right now, and it's up for the year. It was down for most of the year up until I'd say June. It was down for the year, same with the NASDAQ. But the accumulation distribution rating assigned by IBD is a C+ for both of these indices, the NASDAQ and the S&P. So I gave both of these a yellow. In fact, I haven't seen this really. I don't know that I've seen these at A or B this entire year. And then the IBD 50, which is a composite of 50 highly rated growth stocks from IBD. This one's also above the major moving averages. This one also just recently moved to being up for the year. It was down for most of the year. So I'll give this one a green as well. Our last bull market, so we're currently in a bull market still, started in March 2009. This is one of the longest running bull markets certainly in the past since 1970s. And I have a screenshot of when IBD showed how long all the bull and bear markets have lasted since the 70s. And it was actually in one of my former presentations. But this is this has been a long-running bull market, so I'm giving this a yellow because we're not quite in a bear market yet, although we could be transitioning to one. We'll look at that when we do the market analysis, but I think it's too early to tell for sure. And the last bear market was from the financial crisis that ended in February 2009, a long time ago. Again, this has been one of the longest times when we've gone between bear markets in the recent history. So this gets a red because as this bull market is longer and longer in time, it tends to lose steam and lose the ability to drive stocks significantly higher. And conversely, an early stage bull market has usually more potential to lead to bigger gains. And intermediate corrections, these are corrections in the NASDAQ of about 10 to 15% range. There's been 9 of these in the current bull market since that we started in March 2009. So again, just historically, this is a high number. If you read Bill O'Neill's book when he talks about these, this is a very high number historically that we don't see too often. So it again points to why a lot of growth stocks are having trouble making significant gains in this year and last year. So this gets a red. So overall, we got some reds, some yellows, and only one green. So it's pretty consistent with what the dashboard has shown in 2015 and 16, which is, I think, is pretty consistent with how growth stocks have been performing in general. All right, the IBD feature of the month this month is the IBD 50 list. And this is a list of 50 stocks that have superior fundamental and technical characteristics. This list is available through the website investors.com or through the IBD weekly newspaper. One thing to keep in mind is that while these stocks have very strong fundamentals and technical performance overall, they're not necessarily at or near an ideal buy point. So they may or may not be within buy range, depending on your strategy and how you want to buy them. Many times, in fact, if you look at these, what I've found is many times they're extended in price and they're not buyable. So just something to keep in mind. It's not just something that you want to go just buying these stocks without doing a technical analysis on the chart first. So as you go through this list, there's 50 stocks, and if you're looking to add a handful of these to your watch list, a couple suggestions for narrowing down the list. The first one is that you can look at stocks that have triple-digit earnings growth. Typically with earnings growth and sales growth, higher is better, and the higher the number generally leads to a more likelihood that the stock will outperform. So you'll notice that most of the stocks on the list have double-digit earnings and sales growth. So if you find ones with triple digits, like Amazon is one I can think of right now, has triple-digit earnings growth, you can narrow down the list pretty easily that way. Another strategy is that you could ignore any stocks in the list that have negative earnings or sales growth. Those will typically be for the current quarter or for the next quarter estimate. It won't typically be for like the previous 5 quarters, let's say, or annually. It'll typically be the current quarter or the next quarter. And here, this shows, this screenshot here shows where you can find this on the investors.com webpage. So you go on the webpage, you go to click on stock lists, or you can mouse over it and you'll get these lists down here. And then you go click on IBD 50 and the list will come up. And when you click on that, this is the screen you'll see. First, you'll see a little article that summarizes the IBD 50. It'll talk about the performance overall, and it'll talk about, they might talk about specific stocks that are showing certain price action. And then underneath it, you'll see the list, and they're ranked 1 through 50. Generally, the higher they are on the list, so the first stock is in theory has better characteristics than number 2, and so on. But again, you kind of have to go through it and look at the charts and see if they're in a buy range or not, and you can narrow down. And if they're not within a buy range of a cup with handle or a double bottom or some type of consolidation, then you can eliminate a lot of them from your putting them on your watch list, for example. But you can also go here and click on the stock in investors.com. If you're a subscriber, you can bring up the chart and the stock checkup, and then you can actually go, there's an arrow, you can go through these one by one, go through the whole list. Or you can go through them once a week in the weekly paper, which is what I prefer. And in that you get a little summary over here where they have, like I said, they have numbers here about annual earnings growth, last quarter earnings growth, the next quarter estimate. So you can go through these, and like I said, you may, if you're looking to narrow this down, you could say like Paycom Software, for example, has triple digit last quarter earnings growth, but it has negative sales growth. So that might, even that one might not want to go on your list. But this one here, oh, I'm sorry, no, that's positive sales growth. So that'd be a good one. And then AMN Healthcare is another one that has triple digits here. Another way you can screen through these and narrow these down is you could look at the ROE and pre-tax margin. I like to see these totaling up around 50. So if you get a lower one like Dicom is 23, and we have 35 here. I like to see higher numbers here, like NetEase has pretty high numbers here, combined about 60. But you get a little summary here, and then the mini chart here gives you get to see the chart right there, and then they give you a little description. You get that same thing on the website as well. And then they give you some numbers up here as far as composite rating, EPS rating, etc. One thing I want to point out here is in the paper, the supply-demand rating, this is a number 1 through 99, and it's a proprietary ranking, and IBD doesn't say much about it, but they only supply it on some stocks, and to see a number in the 90s is pretty rare. So you can see like LGI Homes and Dicom here have numbers in the 90s. That's pretty rare, and numbers like 95 are almost unheard of. So that's another way you could think about narrowing down this list if you were going to go through these 50 stocks and put some of them on your watch list. Okay, next topic is stock list management, or we could call this watch list management. So maintaining watch lists is a necessary part of investing because you want to have a list of stocks that are pre-screened to meet your criteria for fundamentals and technical, and ideally have some type of alert set up where if a stock goes through a resistance level or it goes through a buy point, that you'll get a notification that happened, and you'll have already screened the stock and know that you want to buy it, and then all you have to do is go buy it whenever it reaches the price you want. So this allows you to focus on a smaller number of stocks that meet your screening criteria. And like I said, if they trigger a buy or a sell signal, you can take prompt action rather than having to go look. Let's say you get an alert on a stock, but you haven't pre-screened it. Now you have to go and look at the fundamentals and read the chart and see if it's worth buying or not. You want to have done that homework ahead of time. You can do it on the weekend, especially. Update your watch list on the weekend. And then during the week, all you have to do is, if a stock reaches a buy point or gives a sell signal, you just go execute the trade. So based on your investing strategy, you may want to have multiple watch lists. And I'll go through the ones that I maintain here below. I recommend updating your watch list on a weekly basis. Like I said, on the weekend is a good time to do it for most people. If you trade full time, you can do this more often. But if you work for a living and you're trading part time or casually, then probably weekly is a good frequency. Maybe even every other week if you're really busy. And then you want to set a maximum number of stocks for each list. The smaller the better, I think. I would say 5 or less per list, because you don't want to be watching. It's really hard to actively watch like 20 stocks, 25 stocks. It's a lot easier to watch a handful, and you're looking for a specific price and volume action where you're going to buy or you're going to sell. So here's the list that I maintain, and I don't look at all these lists every day, but I keep a list in MarketSmith of my current positions. That's just so I can quickly go through the charts of all the stocks I currently own, which is 5 or less is how many positions I look for. I also have a watch list of growth stocks, And these are can slim type stocks that have strong fundamentals, and they may or may not be in buy range. If they're really extended, I probably won't put them on my watch list. But if they're near a buy point or they're forming a base, then I'll keep them on here, and I'll watch for some type of price and volume action where I want to maybe think about buying the stock. New issues. These are stocks that are recent IPOs in the past year. I like new issues personally. They're not for everybody. They're a little more volatile, and they can be a little more risky than a more established company, more established growth stocks. But I do like to trade a mixture of different companies. So I like new issues personally. I'm going to go through at least one of those. Actually, yeah, just one in the stock simulation later to show some of the power that can sometimes happen with these new issues. But IBD did say that they've studied historically the performance of different types of bases, such as a cup with handle, a double bottom, IPO base, and they said they found that IPO bases were historically the best performing. So these new stocks, they don't have overhead supply, they haven't established a lot of price resistance levels yet, so they can be, I just find they can have an easier time making new highs than other more established companies, and they might do it faster too. Recently closed positions is a list I keep, and that's just this one I put 10 stocks. They're the last 10 stocks that I sold. And the reason I do this is because it's good to keep an eye on stocks that you have recently traded, because you might have bought a stock and it might have hit your profit goal and you took your profits. But I like to look at it once in a while, and I don't look at this every day, maybe once a week, maybe once every other week, just to see maybe that stock that I sold for a profit is now forming a new base, and maybe I want to put it back on one of my watch lists. Or maybe it's been on a decline for a while, and maybe it's approaching a key spot where I would expect support to come in, and maybe I'll want to buy it back there. So it's good to, these are stocks that, again, I've already screened. So maybe I took a profit, maybe I took a loss, but either way, I want to keep an eye on these stocks that I've recently traded, because they might present new opportunities to re-enter a position. Sectors and ETFs. I have a handful of sectors that I'm watching. For example, cybersecurity, biotech, and oil. And again, I don't check this one often. Maybe every other week, I just take a look. And these are just sectors of interest to me where I'm maybe looking for a rebound, or oil, for example, is way down compared to where it was. So I'm watching for that to start showing a new uptrend, and I might consider buying like an oil ETF. And then short sales. This is a list of former winners. So some of the companies I have on here are Proto Labs, and I'm trying to think of another one that's on there. Ambarella. Some stocks like that used to be big winners, used to have really strong earnings growth, and now probably what's happening is earnings growth is starting to decline, decelerate, or potentially even go negative. And these companies can become good short sale candidates, especially if they've made a big run, like Ambarella or Skechers. Those both formed climax tops. They can present good short sale opportunities a period of time after they hit their peak. And then the last list I have is called Back Burner. And these are just random stocks that maybe I want to keep an eye on a monthly basis or something. Stocks in which I'm interested, but maybe their sales and earnings growth is just not where it needs to be yet, or the chart doesn't look good. An example I like is Alibaba. I've been keeping an eye on Alibaba since it's gone public. Technically, it's not, the chart doesn't interest me right now, but I just like to keep an eye on it once in a while. I don't want to forget about it. Tesla is another one I keep on there. So I just have a few stocks I'll look at once in a great while. And then I just made a note here. that another list you can consider is a list of stocks that are reporting earnings soon. And the reason for that is to be aware of companies that are reporting earnings, and I like to watch for a viable gap up on the earnings report. Gigamon was a recent one. It wasn't much of a gap, but it was up significantly on the earnings report in huge volume, and that can be, especially if it's a viable gap, that can be a buy signal. Couple recent ones were eBay. eBay had a big gap up, which is holding nicely since then. And Trex just had a big gap up yesterday on the earnings report. Okay, so we're gonna switch over to MarketSmith, and we'll do a market analysis, and then we'll do one or two stock simulations. Okay, so starting with the NASDAQ, I always start with the monthly chart here, and not much of a change since last month. If you look here, the month of July, the month was up about 6.5%, so that's a pretty good up month. But we are now coming into some resistance. You can see last month the high was 51.75, and now we're right around 5,200. So these whole numbers like 5,000, 5,100, 5,200, they can be good, or they're going to tend to be resistance points. And you can see that since the financial crisis in 2008, 2009, we've been running for a long time here, and I can draw a pretty nice uptrending line here that connects in 3 points, almost 4 points, and you can see that was broken last August, so about a year ago. And ever since then, the NASDAQ's basically been moving sideways. So you can see here we had a nice uptrend. It was moving up, up, up. There were a couple of points where we went sideways a little bit, but you can see that we've been moving sideways now for quite a while, and it seems to be having trouble breaking through the recent resistance points, like around 5,200 here. Okay, but you can see last month we came back up through the 10-week and the 40-week moving average in heavy volume here, and then we had volume was increasing as we went up here. You can see the volume is trending upwards as we're stepping up. So that looks good. That technical action looks good. Came through the 5,000 level, no problem. So now the next thing is, can we break through this 52.32 prior? This was a prior all-time high on the NASDAQ. We also, like I said, hit resistance here around 5,200, and you can see that we came off of that in heavier volume. This day was heavier volume than this day. That's not a great sign. That shows some hesitation to go through the 5,200 level. So that's kind of what I'm looking for right now. Is I suspect that the NASDAQ's gonna have trouble poking through 5,200. It might meander around there for a bit. I suspect we're gonna pull back a little bit here because we had this pretty good run here. We had about a 5-week run from the when the market sold off for those couple of days due to the British exit vote, and then ever since then you can see we had a gap up, gap up, gap up, gap up, and we've been just moving nicely higher. So a pullback at this point is not unexpected. So, but overall, the NASDAQ's it's looking okay. Some growth stocks have been doing well in these 5 weeks here. Let's look at the Russell 2000. This one had a sharper sell-off than the NASDAQ. And it was really in bear market territory here. And it's come back up similarly to the NASDAQ. We're trading above the major moving averages now. And you can see some hitting a peak here of around 1225. So this one has a little ways to go yet before it gets close to 1300. which is the high shown on the chart here. So this is looking better. It was looking a lot weaker than the NASDAQ for a while. And then the IBD 50, we had, you can see volume was generally lower on this index as it was coming up. And we had one heavy volume week right here. But this one didn't have as sharp of a sell-off due to the British exit vote, and it's been coming back up in unison with the indices, but volume has not been great. I'd like to see heavier volume here. And this one has a little ways to go before it gets near the new high price at 225. You can see it's hitting resistance here around the 211, which we hit a lot of resistance earlier at 213. Okay, so let's go through a simulation here. Acacia Communications is a stock I've been watching. We're going to go back to the day it went public. And this is a new issue. And I'm going to hide all my annotations here. Okay. All right, so let's look at an example here of how we might have managed a position in this stock, or maybe we would have not taken a position in it. But I was drawn to this stock when it went public because it was priced, first of all, it was priced very highly, and these new IPOs that come out, the ones that are priced in the $20, $30, $40 range, generally that means there's more institutional demand to buy them. The price has been driven up high as opposed to like a $10 newer IPO. So when I saw this thing coming trading in like the $30 range the first day, that shows that the price is pretty high, which probably means there's a lot of institutional demand for this. Another thing to watch here is that the IPO price, which means that's the price that people paid for shares before the first day of trading, was 23. And you can see that we didn't trade on the first day here, we didn't trade below 29. So this thing is trading well above the IPO price. And when that happens, and when they keep trading above the IPO price, that's a sign of strength in new issues. So on day one, I'm loving this. Is looking really nice. And what I'd like to see is I'd like to see this thing form a little consolidation, like a little cup base here, and break to a new high where I can buy it. We also had decent volume here, 900,000 shares on the first day. So let's just step forward in time here and see what happens. Second day, stock came down quite a bit, which this is pretty common actually. Stocks that trade up a lot from their IPO price on the first day, they will a lot of times come down and then they'll form a little consolidation. So, I would give this thing at least like a week to form some kind of an IPO base. IBD recommends like 7 days minimum, and then up to, I don't remember if it's 3 or 5 weeks, but something around there. So let's just step through this. Right now, I'd say no action on this. We're watching for this thing to kind of round out and finish a base and hit a new high. So right now, I would be setting an alert up here at 31.94 and looking for this thing to bust through that level. Okay, and there we go. This day here, the stock trades above 31.94. So this would be a day 1, 2, 3, 4, 5, 6. This is the 7th day of trading. So you could be totally justified in entering a position right here if you like new issues and you want to trade a new issue. This corrected from 32 down to 27. So that's about a 15% correction, which is very reasonable for a new IPO. And so this would be a fine day to take a position in this stock. And what I would do is set the stop to 31.94. So if the stock closes below 31.94, sell and cut your losses. Because assuming here you probably would have got, let's say we would have got filled somewhere around 32, 32.50. That's not much of that's a very tight stop. And if you wanted to set a stop that's not so tight, you could use this level here, 31.25, as another stop, or you could even use the whole number of 31 as a stop. So let's see what happens. Let's say we took a position right here. So the next day we're pretty happy with that decision. This thing's up another 8%, and it's up from the buy point. It's up about, we're near 36, so we're up about 12%. So if you did buy this day, you're pretty happy with your decision here. So I would hold this for now. Okay, again, you're going to be pretty happy at this point. This thing is taking off up another nearly 6% this day. And we're getting close to the 10th day of trading, so we're going to get a 10-day moving average pretty soon here, which is a good benchmark, a good moving average to watch for a new issue. Okay, came down 1%. No, I'd say no action here. Let's hold on to this. We're moving sideways. Up again another 3-something%. So at this point, 32, 20% of 32 would be about 6. So up around 38. So this thing is up now more than 20%. So you could at this point, since this is up more than 20% within about a 2-week period, you could invoke one of the rules from Bill O'Neill's book where he says, don't sell if a stock is up 20% in 3 weeks or less, then you want to hold it for at least 8 weeks. So let's assume that we invoked that sell rule, and we're going to hold this thing for at least 8 weeks from this day right here. So 1, 2, 3, 4, 5. So we'll be holding it until out in here somewhere. Okay, this day is a little concerning as you can see we finished low in the range here, 20% of the day's range, and it was a heavier volume day than most other days. Now we don't have a lot of volume history here on a new issue, but this was one of the higher volume days, and it finished low in the range, which shows that buyers were in early in the stock, driving it up higher, and then the sellers overtook it and started driving the price back down. So not ideal. And then the next day we've got some selling happening, down 5% in again some decent volume here. But if we're going to invoke the 8-week sell rule, there's no action yet. The one thing I will mention with that 8-week sell rule is you do still want to have a defensive selling rule in place. So we're going to keep our stop here of 31.94 as we go through this. Okay, so we got another down day, finishing at the very bottom of the range. Volume's a little lower, but this is not really what we want to see, but I'd say there's no action yet. Trading sideways that day. We're coming back up here. Volume's kind of light on these few days here. Okay, so now this day, MarketSmith pattern recognition is saying we have a valid IPO base. That's because we had a run up here, about a 20% run up, and now we've got this little consolidation, which is 19% deep from here to the bottom and to here, and we've had more than about, it's been about 2 weeks. So at this point, I would set an alert at 43.10 and watch for this thing to go through the 43.10 level and add to the initial position from down here, because this is forming a little bit of a consolidation here. You could have also used this 41.20 as an early entry and taken, you could have added to your position here. Or if you passed on the stock down here and didn't buy on this day, but you had it on your watch list, you could have bought it in here. But let's watch. Let's hope this thing goes above 43.10. And it does the next day right here. So this would be a fine day to add to your position from down here. And you know, how much you want to add is up to you. This is a valid base, so you could take a whole new position. Or you could add like 20% of what your initial position was. You could add any percentage really. But this is looking good again. We've got a higher volume day here, finishing high in the range. Same thing right here. So this is looking good. And this stock doesn't report earnings until August 11th. So on the chart here, we're on June 16th. So there's no action in that regard. Now, for the buy up here, you could set your stop. I would set the stop to 43.10, the pivot here, meaning if it closes below 43.10, I would exit this new position I took. You could also use this point right here as 41.20, or you could use 42.61 right here. You could use 42 or 43. Those would all be decent stop losses to keep for this new position, assuming we bought one right here. So this day came down and it came near the pivot. You can see the low was 43.16. The pivot's 43.10. So it came down to there, but it's bouncing up off of it. So there's no action. Okay, so this day, this is a disappointing day. You can see that the stock's down. The volume was decent. It clearly closed the day below the 43.10. And in fact, it closed at 41.19. So if you used 43, 42, anywhere in there, you would have got stopped out this day for a loss, and you would have had to sell that position. If you used 41.20 as your stop, you would still be, you could arguably still be holding it because it's only a penny below that. So you could let this go one more day, but I'd be selling the position that was taken right here. And then this day is disappointing. Now we broke down through the 10-day moving average. Volume is increasing here as the stock comes down, and it finished low in the range now 2 days in a row. So this is disappointing. I would think if you bought up here, you would definitely be out by this point because you'd be sitting on too big of a loss to ignore. But luckily, if we still have our position down here, which we're going to hold for 8 weeks, we've still got 1, 2, 3, 4. We're 4 weeks into it. So we would still be holding this in this position, which has a nice gain. And at this point, I'd be looking for this thing to come back up through 43.10 and go at this again. Because oftentimes these stocks will punch through a buy point like this, and then they'll pull back, and then they'll go through it again. And you might have to you might have to try it 2 or 3 times before it goes. But that's okay in my book. If I have to buy this 3 times and I take like a 2% loss 3 times in a row, and then the third time I buy it, it goes up, let's say 20%, I'm okay with that personally. But you know, it depends on your strategy. You may want to set a larger stop and not have to keep rebuying the thing and reselling it. So there's no action here. I'd say no action again to be taken unless the stock threatens our stop loss down here, or if it breaks above 43.10. This day would be really disappointing here, 7.5% down, and you can see the low of the day was 33. So we're within $1 of our stop loss. So this is pretty disappointing now. And if this thing closes below our stop loss, we're going to have to sell it. But this is a good day here. Bounces back. No action to take here. Now we're getting close up to the 43.10 level again. So if this broke through 43.10 again, I personally would give it a shot again. This day is very close to the 43.10. And okay, this day broke through it and closed above it. So I'd give this thing a shot right here again. Buy it again. It'd be disappointed by the end of the day, especially if you bought around 45 because you finished lower in the daily range. And you can see here, you can see resistance forming around this price level, around 45, 46. You can see this came up, came back down, came up, came back down, down again, and down again. So this thing's hitting clear resistance around 45, 46. So this has happened now 4 different days in a row, and if this keeps happening, at some point it's likely that it's going to break through it, or it's going to not break through this and it's going to correct. But if it keeps testing it, odds are good, in my experience, that it's going to go through it eventually. So I would buy back this position here on this IPO base on this day and set 43.10 as the stop again. You can see the low for the day here was 43.20, was basically at the pivot, but it bounced off of there, so that's good, even though we finished low in the range. No action here. Okay, so this day you'd be happy here to see this going higher, 11% actually in heavy volume, the heaviest volume since the first day. So you'd be really happy on this day. And it also broke through this 45.75 level, which you can see we hit resistance here 3 different days. And we broke through the resistance. It was at 45.46. So this is great. At this point, you could even think about moving your stop up to this 45.75 level. You could have also done that you could also do it for this position down here if you wanted. You could be moving your stop up. So let's say we bought the initial position this day, and we're looking for 1, 2, 3, 4, 5, 6, 7. So the 8th week is coming up here. So we're almost at the 8-week point. Okay, again, you'd be pretty happy this day up another 5%. So at this point, you want to be thinking about, do I want to sell this thing for a profit at some point? If it breaks out, if it goes 20 or 25% from this IPO base, which is this green area, this green profit area, do I want to take my profits, or do I want to try to hold on to this thing a little longer and maybe use the 10-day moving average as my stop point? Again, totally up to you how you want to manage it. So we're getting close now. This thing it is up now 20% from the IPO base. If we were going to manage this like a traditional, I'd say, using most of the sell rules from Bill O'Neill's book, it would be totally acceptable to sell the stock on this day right here, as it went up 25%, actually more than 25%, 27% from the IPO base, from that pivot. It would be, you'd be sitting on a really nice gain from this early position at 32. You'd be up almost, well, you'd be up about 50% on that position, and then this one you'd be up 25%. So it would be totally fine to take your profits here. If you wanted to stretch it a little longer, you could say, I'm going to wait for the stock to close below the 10-day moving average to extend the gains a little more. Or if you think the stock is good for a longer term hold, maybe you want to hold this stock for the long term and wait until an earnings report comes up and see what happens. If you're going to do that, you have about a month here to wait. So if you would have held let's say we were waiting. Let's say we use the 10-day moving average as our stop guide. There would basically be no action to take throughout here, except you'd just be counting your money. This day is a little ominous as it's, we finish at the bottom of the range in somewhat heavy volume, but if we're using the 10-day now to extend the gains, there'd be no action to take. Still moving up. Another down day here. Now you can see here we've established a 50-day moving average. We've had 50 trading days. So you can see how now this thing is trading 42% above the 50-day moving average. That's pretty high above the moving average. So a pullback at that point is not out of the question. But let's just say at this point we're going to use the 10-day moving average to extend the gains. So we're looking for the stock to close below the 10-day moving average. Otherwise, there's no action to take. And right there is the first day that it does that. So if you didn't sell initially where the stock was up the 20 to 25% from the IPO base, this would be a fine day to sell right here as the stock closes below the 10-day moving average. Even though volume this day wasn't huge, you still have you'd have a great gain from 43 to 60, nearly a 50% gain, and actually about a 100% gain from this early position down here. So if you didn't want to do that, the other option would be to wait till the earnings report and see what happens. So if you did that, here's today and where the stock is today. You can see it's down again. It's looking like it's going to close below this day, still below the 10-day moving average, and earnings are due on August 11th. So if you didn't sell here on the 10-day moving average violation, you could just say, hey, I want to see what happens on the earnings report and reassess at that point. The stock could come and form a new consolidation here. If it does, you could add to your position again. You could take a new position. So that concludes this simulation. I'm just going to do this one today. That took quite longer than I expected. But just some things that drew me to this stock when it was public was the high price of an IPO, the high volume, so we've got high liquidity, and then the fundamentals of this are fantastic already. Earnings per share is 84. That means that their earnings performance is better than 84% of other companies, which for a new IPO is great. The group relative strength rating is an A+. The SMR rating, that's sales, profit margin, and return on equity, is an A. That's the best possible. Accumulation distribution is an A. The best possible is an A+. It's got a 99 composite rating, meaning its overall ratings in IBD proprietary rating is better than 99% of other stocks. You can see for this year, earnings are expected to be up 78%. They were recently, that estimate was recently revised higher. Next year is projected to be up 54%, and that was recently revised higher. And then if you look at the quarterly earnings growth, 100%, 100%, 313, 193%. Triple-digit earnings growth is never a bad thing here. And you can see sales growth is also high, 40, 67, and 79%. And sales growth is actually accelerating. And if we go to the weekly, a lot of on newer issues, you don't always get these types of numbers here, but return on equity is 56%, which is fantastic. There's not a huge mutual fund following on this, which I actually, I think it's a good thing at this point, because if this number goes to 500 over the next few years, that means that funds are going to be piling into this stock, and the stock price is just going to keep being driven higher. Certainly stocks like Google and Apple and Priceline, they didn't have the mutual fund following that they now have when they first went public. It builds up slowly over time. But you can see we got a lot of triple-digit earnings growth here in recent quarters. We got some triple-digit sales growth, mostly high double digits. So I really like this stock. I would, you know, I think this is a good one for the watch list. It's past a first stage base here, so a second stage base would be totally appropriate to buy. And with the earnings report coming up next week, it'll definitely be interesting to see what happens. I'm looking for a viable gap up on the earnings report, and if that happens, I'll probably take another position in this. All right, let's go back to the PowerPoint and finish up here. So if you found this video on YouTube and you're not a member of the meetup group, then you can join the group by following the below link. You do need a free meetup account, and it's easy to set up. It only takes a few minutes. And if you're wondering why you should join the group, files like this presentation and other files like cheat sheets and tracking spreadsheets, etc., are available to members only on the meetup website. You also are notified when a new video or a new file is posted. You can also subscribe to our YouTube channel, and you'll also then be notified if a new video is posted. There were no questions from last month from any of the members. And for a future topic next month, I'm going to talk about buyable gaps. And this is kind of timely considering that we're in the midst of earnings season right now. We're going to look at some gap ups on earnings reports, ones that worked and ones that didn't work, and we'll look at some of the reasons why that was true. If you have a suggestion for a future topic, please message me on Meetup. And if you have any questions, also message me on Meetup. I respond to all my messages on there. Thanks for joining, and I'll see you next month.